Welcome back to Closing Bell West Africa, and joining me in the studio to discuss his company's results is Tosin Runsewe, is the Chief Client Officer at Guaranty Trust Assurance. Tosin, it's great to have you on the show today. I'm going to go straight into the numbers, particularly the top line. We saw very positive numbers there. Gross premium up 33%. On the bottom line, we also saw very positive growth there. PBT up about 49%. We'll run us through the drivers, and I think some analysts have noted that Q4, we saw a bit of a slowdown in the gross premium growth.
Okay, thanks for having me, Wole. Traditionally, Q4 is our slowest quarter. Q1, on the other hand, is our strongest quarter. I think essentially we tend to mirror corporate Nigeria. Corporate Nigeria really runs from January to December in terms of the financial year. So you have a lot of companies, booking most of their institutional or commercial product lines early in the year. And traditionally they taper off at the end of the year. But for us, I think the growth drivers really have been marine. We grew by 78% with the marine line. We grew fire by 48%, and oil and energy also grew by 42%. I think these three lines have been the growth drivers for 2011.
Well, clearly, one thing that's obviously been interesting analysts and investors recently is your foray into retail. And what I'm hearing is that finally we're seeing that business becoming net positive.
It's very interesting, Wole. We grew our retail business last year, top line by 48%. And I'm also happy to announce to you that our retail business has broken even. In 2010, we made a loss of 11 million naira, which was near break-even. In 2011, we made a profit in our entire retail business of about 107 million. So we are seeing growth.
Retail is about how much of your business now?
Last year was 23%. Previous year it was 21%. The year before then it was 17%. So you're seeing retail is actually beginning to grow, in terms of contribution to our business.
And that's a deliberate strategy, right? And why is that very important to you?
Retail business, gives you stability. It gives you the stability that you need as an underwriter. You're not really dependent, for example, on maybe the institutional, intermediaries. And also, most of the transactions we book in retail business tend to be within our retention capacities. So we don't really reinsure a lot of the retail business. And therefore, in the long run, retail will be more profitable than institutional business.
Okay, so let's talk a bit about, should I say, life after GT Bank. Clearly, GT Bank sold out of your business last year. And big question is, where do you go from here? I mean, many people, for instance, were anticipating a rebranding. What's the update on life after GT?
I think that's an interesting question. We have seen growth after GT Bank's exit. For example, in our bank assurance business, we've seen a few banks who had obviously admired, our bank assurance offering and couldn't really get into partnership with us because we were the subsidiary of a competitor, have now come to us. They're beginning to integrate our product offering, into their operations, especially the banks that have a focus on retail banking themselves. So we're beginning to see that. And remember also that we have a bank assurance agreement still with GT Bank, so that is in place, but we're beginning to expand, through other banks. But life after GT Bank, I will say to you that one thing remains, very clear: the culture. The culture remains the same. The culture is based on the core values, integrity, responsibility, innovation, customer focus, excellence. All of these things that we got from GT Bank are woven into our DNA, and none of that is going to change.
Right.
But the brand will have to change. And a lot of work is already, going on in that particular area. We've appointed a branding consultant from somewhere in the continent, a leading branding consultant. And before the end of the year, we will see a change in the brand.
Okay, let's talk about the broader insurance space. Over the last few years, growth seemed to have slowed down in insurance in Nigeria. And the stock market already reflects the fact that investors are not very excited about insurance, looking at where insurance stocks are today. But give us a sense of the outlook for the insurance space. Clearly, that's your business.
I think, Wole, the first thing you need to understand is that the potential remains very big in insurance space. Nigeria is a big market in terms of people, 160 million people. No matter how you want to divide or segment the market, you will get 30, 40 million Nigerians who have the need, who have the means to buy insurance products. And therefore, the growth potential remains very high. what we have seen is some sort of realignment. We've seen, capital raised a few years ago, but also quite a lot of money lost in the capital market. So there is a bit of restructuring going on. But the leaders in the industry, if you really, do the analysis, are beginning to pull away from the rest of the pack.
So you're saying those are gaining market share?
Those are gaining market share.
Quite a number are losing.
Yeah, I mean, if you look at us, last year we grew 33%. The previous year we grew 40%. Our 5-year, compounded annual growth rate is 48%. And you will find a couple of companies, they might not have that high CAGR, but then they have very interesting CAGR. So even though the rest of the market might not be growing that much, the industry itself has a CAGR of about 20% over the last 5 years.
Right.
But you will see the leaders beginning to pull away, I think, as a result of their people, their products, their distribution, their technology. All of these factors will determine who the leaders will be.
Right, the final point, clearly you're an institutional investor. The stock market has struggled a bit over the last few years. How are you approaching the capital market right now?
I think we have decided to take a back seat for now. We've seen the capital market become a drag on our investment earnings over the last few years. So we have essentially restructured our asset allocation away from quoted stocks, for the time being. But generally this year, I think what you will see in the early part of the year is a lot of sideways trading. And later on in the year, you will see some changes that I think will be based on the monetary policy direction of central bank. I think interest rate direction is going to be a big factor, in determining the direction of the capital market this year. In a year that the Eurozone problem appears to have, gone away, I think that's what will determine where the capital market will go this year.
Tosin, thank you so much for joining us and for your insight. Tosin Runsewe is the Chief Client Officer at Guaranty Trust Assurance.